Okay, hi guys. And guess what? I remembered to hit record. What? Aren't you excited for me? I'm excited for myself. Okay, we have Jones. Let's see. Stephanie. And Tanisha. Okay, so hopefully we'll have one or two more join us. So this is our last class, our last live lecture. Hey Candace. So how many of you actually feel like accounting was better than what you thought it was going to be? Awesome. How many of you feel like it was actually a class that was very advantageous to take? Okay, one. Well, hopefully, as you know, we've been talking. Okay, Stephanie, perfect, Jay. Especially with you and your husband owning your own business. See, that's awesome. That is great. That's exactly what I want to hear. And using a budget. Yeah, it's so important. The great thing about accounting is, like I've said all along, it's just your budget, personally, on steroids. So all of us actually do accounting in our daily life. We just don't realize we're actually doing accounting. So that's the great part. And then there's a lot of times that you realize in taking accounting what you need to do better in your personal life. Because not only in your books, but also spiritually, if you're not in balance, a lot of things can go wrong. And so it's important to be balanced financially with your work life and with your spiritual life. And if everything is in balance, then everything's great. Someone just joined the room and I forgot to add them. Candace, Kim, Tanisha, Velma. Hey Velma! Velma, Bailey, Brittany, Davis. Perfect. Okay. Okay, and I apologize, I've got a little bit of headache. And this is probably going to, I know they want us to keep our live lectures to 40 minutes at least, but guys, we're at the end. I've been getting a lot of your 4.1, your personal budgets already in. The professional development, hey Taylor, is due on Thursday, and then your final is due on Saturday. Any extra credit is due by Sunday. Any late assignments are due by Sunday. Sunday midnight, not 12:01, midnight. All of y'all are pretty good in that there's very few people missing any late assignments. There's some extra credit out there. A lot of you have already submitted it. It's very easy, but at the same time it's very advantageous, and so that's a couple of extra points if you miss some discussions or a live lecture. So that's great. Most of our people are here tonight. 1, 2, 3, 4, 5. We got 10 out of the 15, so that's awesome. That's actually great. Okay, so let's go over, do y'all have any questions for last week, week 3? Week 3, we went over preparing an income statement. And so we're going to kind of go over that right now. No? Okay, we're good. Okay, so the first thing we're going to look at is exercise 2.6. I'm going to make this a little bit bigger so that I can actually see. And that means that y'all probably can see too. Hopefully that means that it's better for you. Oh, yay! Cool. Y'all should have told me a long time ago, make that thing bigger. Okay, so exercise 2.6, which is really confusing because it's week 3, assignment 3.1. God help us if things made sense on this thing. We're computing the net income or net loss. So we have a computer maintenance and repair shop, and they had the following revenue and expenses during the month end of July 31st. So as we can see, they had fees for computer repairs. Wow, they made $44,600 in revenue. That's awesome. But they had advertising expense, salary expense. Salary expense is pretty large, which, you know, it probably should be. Telephone expense, fees for printer repairs, and which is pretty good. Obviously, people mess up their computers more than they do their printers. And utilities. So what we want to know is, did the firm earn a net income or incur a net loss for the period, and what was the amount? So the great thing is we can literally take the $44,600 and the $6,550 and subtract out all of the expenses. So yes, they made money. And if everybody did their assignment correctly, which the majority of y'all got 100s on, they made a net profit of $23,000. So that's great. Now, obviously, this does not tell us, did they already recoup, did they receive that $23,000 up front, or, you know, was part of that accounts receivable? How did they get it? It doesn't tell us, and that's not what we're really wanting to know at this point. What we're wanting to know is, this month, did we make money? Obviously, getting paid is great because you want to have $44,000 in fees. The only thing better is to actually receive $44,000 in fees. But it tells us we're on the right track. It might also tell us that out of that, $44,600 and $6,550, hey Heather, is $51,150, of which $19,100 was salary. So what that tells us is, hold on. I like playing around every once in a while. Okay, so what that tells us, you cannot hear me? Is that better? Okay, hopefully that's better. Okay, because everybody else can hear me. Okay, Heather, not a problem. The important part is you're here. It doesn't matter if you're late. Okay. So what we can very quickly do is analyze these reports. So out of $51,150, we have $19,100 in salary. So what is our salary expense running? Well, our salary expense, if you take $19,100 and divide it into $51,150, we know that we're spending 37% of our income on salaries. That's not terribly bad. At least we're not spending half. You never really want to spend half on salaries. You want it to keep it lower than that. So 51,100 divided by 4 is 12,775. So we're spending 51,100 divided by 3, about a third. Yeah, a little over a third on salaries. So that's not terrible. That's probably in line. And that's what accounting is going to do, is you're going to be able to sit here and go, how much am I spending on this? If your salary was over half, then one, you either need to look at, am I staffing the right amount of people? Am I charging the right correctly? Because if it took that much in salary, did I undercharge? Do I have someone that's cooking the books? Do I have too many employees? What's going on? And so that's the great thing about that. Or, you know, it's great. You can look at it and go, wow, I'm spending about a third in salaries. I'm good. I'm in line. Same thing if your telephone expense was extremely high. Then you're like, do I have someone calling Tokyo on my dime? I worked for a company one time. Actually, it was my company. We owned a restaurant. And we had a girl that her husband was overseas, and she would open up for us, and she was actually coming in about 3 o'clock in the morning and calling Korea on our dime. When you get that first bill for Korea, you notice it. So you can't just, I don't think a business should ever have anything on auto pay. And if you do, you have to be very diligent in still looking at items. Because, you know, you don't want to just go, oh, it's on auto pay and just go through, because I hate to say it, people, but your employees will take advantage of you. Sometimes because they feel like you own a business, so you've got plenty of money and you're not going to miss it. Because people aren't seeing the other side and seeing that, okay, we own a business, that doesn't mean we're making money. Maybe the business is making money, but I haven't taken a salary for 2 years and we're living off of my husband's income. So you have to always be diligent. And so that's hopefully something you've learned in watching the videos about Bernie Madoff and Enron and everything, is you have to be diligent. You can't just turn over your accounting and never look at it. So are y'all getting that out of this, is that you have to be that diligent? Perfect. Perfect. I actually had employees that were coming in. We would make hamburger, but we made everything from scratch, including our own hamburger patties, our own chicken fried steaks. We hand formed them, everything. We would load it all up that night to make for the next morning. And then the morning shift was supposed to, you know, restock and make stuff for the afternoon. Sorry, Stephanie. And they kept saying they left us with no food. I'm like, no, I worked. We made 200 hamburger patties. Well, we have an abundance of cars, and so I actually we had a cousin that was a county sheriff, and he sat outside for about a week and watched the two girls in the morning take everything out of the freeze, out of the walk-in, and load it in their car and drive away with it. So there was thousands of dollars in meat products that walked out the door. So it will shock you what people will do. I still can't figure out what all they did with all that. I mean, what do you do with 1,000 hamburger patties? And chicken fried steaks. I don't know what they were doing with it. I don't know if they were selling it or what, feeding it to the hogs. I have no idea. It's kind of scary. Let me see something real quick. Okay. Okay, so then we are doing the Biggest Loser at work, and you, no, I'm not. I like to eat. But good luck with that. I'm sorry. I like food. I'm fluffy. God gave us food for a reason. So we're going to go to exercise 2.8, which is preparing an income statement now. And where is it? There we go. So this one gets a little bit more intense, obviously. And let's see if it's going to let me, yeah. Okay. Move that so that it doesn't show up. Okay. So exercise 2.8 is preparing an income statement. And at the beginning of September, Alexandria Perez started Perez Investment Services, a firm that offers advice about investing and managing money. On September 30th, the accounting records of the business showing the following information. So now here's the thing to kind of remember, that in the beginning of September, she started the business, which means when she opened up the business, she had zero money. So her beginning capital, when you get further into owner's equity, is going to start out with zero until you show any investments or anything like that. So of course we know that there's 3 lines to every financial statement. The business name, so the who, the what is the income statement, and the when is month ending September 30th, 2013. So the first thing that we're going to do is put revenue. Y'all are going to miss my handwriting when this is done. And we have fees. And we have cash. Oh, this is horrible, isn't it? Sorry, guys. And then we have expenses. We're going to do add and salary and telephone. Oops. So we know that we had fees income of $77,900. Oh, that's pretty. And so how do we know that? Well, we had cash of $33,000. We had fees income of $77,900. So revenue, we're going to put cash, $33,100. Well, do we need to put this? No, you don't need to put this. So that's a great thing because we're only doing revenue, and we don't care about cash, do we? Perfect. So then we have expenses. Well, okay, let's see. Do we have expenses? There's advertising expense, $6,500. And then, oh wait, we have salary expense, $16,000. And exactly, we have telephone of $8,000. $800. So remember, they're going to give us more information, like right here, than what we need for that income statement. Do I need what her capital is on the income statement? I don't. So this is miscellaneous money that I don't need. They're giving me way too much money. So we have office supplies. Okay, we need that. That'll go down here. And we have equipment. Well, again, do I need that? They gave it to me. I don't need it because it's not related to income. Is accounts payable income? Nope, don't need it. And same thing. So, remember when you're doing these that not just because you have a number does not mean that it has to be on that piece of paper. They're going to give you more information than you need. So if we do 77,900, and so 77,900, we had expenses of 6,500 that we're going to deduct. 16,000 we're going to deduct, and 8,000 for telephone expense. Let me do that again. 77,900 advertising expense. That is so weird. Because the number that they used here does not. Oh, that's why. Ooh. I was looking at someone else's stuff and it was wrong. So the net income is $54,600 because we're taking the 77,900 minus all this, so it equals $54,600. Great. Did we make money yet? Do we know? We don't know because we just are doing the income statement, so we don't know yet if we've really made money. So that's where we would keep doing more and more and more. Let's go look at assignment 3.1. So let me clear this because that's scary. Oh, we just did assignment 3.1. I wanted assignment 3.2. Sorry. I love it when I don't know when I'm hitting the wrong thing. Do 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 do. Now let's see if it's going to let me be nice. Okay, so we need to prepare an income statement, a statement of owner's equity, and a balance sheet. And when we're looking at the initial T accounts, that's what we're going to be using. Or I shouldn't say T accounts, the initial journal entries. Or T accounts. Which tells us that on May 1st we had income coming in of $15,000 for cash, $980 went out for utilities, etc. So it breaks it down per day, per account. I don't like this. Let me clear that. Let me do this. I'm going to make slides of these next time. So temperamental. So, do any of you know what your next class is? Of course, I have two of you that this is your last class. Oh, Stephanie Marketing, that's fun. You'll like that. Business math. I normally teach business math. I'm not teaching it this time, and you'll do fine. Will is teaching it. He's great. So everything will go just fine. And if you need any help, let me know. No, Velma, you won't have me. You're going to have Will. I don't think I teach again until May right now. So I've been teaching 2 years back to back to back to back every month. Took a 2-month hiatus. And now I'm kind of like not teaching for a while, which I hate because I really love doing it. I'm serious, you can bug me all you want. Unless it is fractions, fractions are from the devil. But the great thing is Will loves fractions. I just don't comprehend why anybody would need to know what 3/56 is. I think it's stupid. Especially when you can say it's 5 3/8. Okay. I just absolutely think it's ridiculous. Okay, so we're going to do an income statement, and we know after adding up all the fees income that they have $7,800 in fees, that they have expenses for utilities of $980, salary expense for $8,900, and telephone expense of $314. Now remember, you have different ways that you can do an income statement. Some people want everything, they'll do one just straight line, and other ones kind of put all the debits, or I shouldn't say debits, deductions to the left, and all of the totals and increases to the right. So fees income would be all the way to the right. Expenses are going to be to the left, but their total expenses right here is going to be all the way to the right. It's whatever you want to do. There's no right or wrong in this instance. You just need to make sure that you break down under revenue each type of revenue you have. So here we only have fees income. keep in mind, as you progress, you could have income from stocks, 401k. I mean, there's all kinds of different incomes you can have that you're going to have to track that. Same as expenses. You don't want to just lump together your expenses. You need to piece out all your expenses, utilities, salary, telephone, etc. Because you want everybody to look at it and go, where's the money going? So they had fees income of $7,880, and they had utilities, salary, and telephone expense of $10,194. Whoa. 10,000, and this did not, $194. So we know $7,880 minus $10,194 means that we lost $2,314. Uh-oh. Well, looky here. Our salary is $8,900 and our fees are $7,880. What happened? Exactly. So we have a net loss, but why? Why is our salary more than our fees? Did we mess up and not, look at the schedule and go, whoa, maybe we didn't charge enough? That could be true. Maybe we had warranty work. Cotton cleaning service. Maybe we got called back out and we had to re-clean. What type of cleaning? Is it cleaning? Okay, so maybe it's a home cleaning service. Maybe it's a commercial cleaning service. And they got hired and either maybe they broke something. Lots of times when I have the cleaning service come in, I get things that are broke. Well, they have to pay to replace that. Maybe they did a really bad job and had to come back out. So did I have warranty work? Did I maybe not charge enough money, like you said? Maybe you're not getting enough business, so whoa, why do I have more people on staff than enough business? If I'm the only employee, maybe I need to look at, I can't draw more in income than what I earn. So that's it's a perfect example that, and you could lose money one month, doesn't mean you're losing money overall. Maybe you're overstaffed, maybe it was the holidays, maybe you thought you were going to be busy, you were running a special, and you hired a bunch of people and you had all these people on staff, and then the special no one took advantage of it. There could be a lot of reasons, but you have to, it's going to give you a hindsight, but you can't go negative very many months. It's just like if you dip into your savings because you're like, ooh, I didn't know I had this bill, and you dip into your savings. Well, if you keep doing that, you have no savings. Same thing with the company. So, and then utilities expense, telephone expense. Okay, we're all okay right there. It's just right there. It's that fees versus salary. That's huge. You went into your savings. I did that at Christmas. And then my husband had a heart attack and didn't work for 2 weeks. Oops. Actually didn't work for 3 weeks because the week after Christmas we had so much snow and rain, he didn't work. That's okay. God will provide. God always provides. And the great thing is, hon, you had the money in savings. So because you were a saver, you had it. So that is a blessing right there. Okay, so let's go to the next one real quick. So now we're going to do the statement of owner's equity. So we already know we lost money this month, but now how do we really look? And that's what's going to kind of help us. Because everybody can have a bad month. I mean, it's sad, but it's true. I hate it when I do this because it doesn't bring it over the way I want it to bring it over. Okay. So, we started out with $50,600 in statements of owner's equity. So, the month ending May 31st is what we're looking at. So, when we walked in the door May 1st, the balance that came over from April 30th, had to think for a minute, was $50,600. We had a net loss for May of $2,314. Then we had a withdrawal of $3,000. Maybe her income wasn't high enough and she wanted to go, you know, I don't know, go to Vegas and pulled out $3,000. So we decreased our capital for a total of $5,314. So I feel like two broke girls right here, where it's, you know, they do that little cash register, and they either go up or down every month or every week. That's exactly what this is. So we started out with $50,600. Now you're going to have the little cash register. Cha-ching! Oops, we went down $45,286. Yay, someone else watches that show. And honestly, I watch it just to see if they made money. And sometimes it doesn't explain why they made or lost money. Sometimes they talk about how they had a $900 bill they didn't know about. And sometimes they don't talk about anything and they still went down. So, great example right there. I like trying to take everyday life or something that you might recognize and put it into accounting or math so that it clicks. By the way, the ones that are getting ready to do math, guys, you do fractions every day. You do percentages every day. If your favorite pair of shoes that you've been looking at and you haven't wanted to spend $100 for them, and they go on sale at Dillard's for 25% off, well, what's 25% off of 100? It's 25%. So you're only paying 75%. If you put it into something that you know, like shoes, sale, I mean, you know how much that blouse is going to be when it goes on sale. You can do it. Don't worry about it. It makes it, you know, just put it into things that you understand. Some people are great bakers and they can dissect a recipe and know how much to increase a recipe or decrease a recipe. Same thing. I've had people that are like, can I turn this into a recipe? I don't care. If it makes you understand it, go for it. Will's the same way. So now we're going to take and do the balance statement. And this is going to tell us where we stand as a company. So, well, yeah, but it's not going to do it. I hate it when it does that. Okay, so it's kind of putting everything together, but that's okay. So once again, Cotton Cleaning Service is the who. The balance sheet is the what, and May 31st, 2016 is the when. We have assets and we have liabilities. So we know that we have cash on hand of $4,686. We have accounts receivables for $5,900. We have supplies on hand of $5,800. And equipment for $33,800. Wow, that is a lot of cleaning equipment. So maybe she's got vacuums and steamers and floor polishers, I don't see why you would have $33,800 in Febreze. And maybe she has a really large cleaning service. That's a lot of equipment, though. Whew. Wow. So we have total assets of $50,186. Okay, sounds great. We have accounts payable for $4,900. You know, it's kind of scary. We have accounts receivable for $5,900, but we owe $4,900 out. And then owner's equity is $45,286. So total liabilities and owner's equity is $50,186. As a company, I think we're equipment heavy. Did someone go to order 10 vacuums and ordered 100? I mean, what happened? Why does any company need that much equipment and have that little cash? So same thing. It tells us we need to look at things. Would everybody kind of agree with that? Okay, perfect. Okay, so let's go talk, because we're about 7:40, let's go talk about your two small assignments this week. We have assignment 4.1 that most people have already completed, and that's just doing a budget. And you want a zero budget. And a zero budget basically is accounting for every dollar. It doesn't have to be spent, but it has to be accounted for. So if it's not going to a bill and it's not going to a good, then it needs to be going into savings. So you have to have everything accounted for. So let's say, let me, that we have income of $5,000 and our rent is $925. Phone is DirecTV is probably way more than it needs to be. Yeah, maybe let's do one payment high. Stop. Okay, it's going to be a pain in the butt. Okay, so, and groceries, 300, gas, let's do utilities, 300. Am I missing anything here? Income, rent, phones, DirecTV, internet, insurance, student loans, groceries, gas, utilities. Okay. if I have, it's going to drive me nuts. I should have never messed with it. So if I have income of $5,000, I have rent for $925, phone $260, direct TV $130, $140, $100, $100, $300. Okay, so I spent $24,900. So 5,000 minus 925, 260, 96, 67, 230, 240, 300, 100, 300. 2518. I'm to the positive. Woohoo! $2,482. Okay, do I have $2,482 to go spend? Yay, Stephanie! Okay, so the very first thing that, this is my opinion, we also have $500 that needs to go to tithes, plus $500 needs to go to savings, because we pay God and then we pay ourselves. So that means that we now have $1,482. Do I have that to go spend? Nope. Okay. Okay, maybe, and that's the point, is you don't go spend, I've got $1,482 to spend. Yeah, you can go, maybe you want to go buy a new pair of shoes, and so you've budgeted $100 a month for clothes. Okay, you can do that. Maybe you've budgeted $50 a month for the bookstore. Like my in-laws are avid readers. I'm an avid reader too. The difference is I rarely buy a book. I either borrow other people's books or I go to the library. I do not comprehend spending $20 to read a book one time. I just don't. So if I read one and I go out and buy it, it's because I really, really, really want that book right then. So the zero budget is literally going, what do I do with this? Well, 10 to 1, these might be your basic bills, but maybe gasoline went up. Gas, electric, okay, water. I left off water. Water's $90, right? So $1,482 minus $90, $100 for clothes, $50 for reading. I'm down to $1,242. Okay, maybe I had to go to the doctor and I have a budget of $50 for copays. Yes, water is more expensive than gasoline right now. It's really sad, isn't it? So I'm down to $1,192. Maybe you save, one of the girls I work with has a $150 budget each month for presents because she's at the age everybody's either getting married or having babies. But you have it down to the penny. If you routinely go out to eat, $300 for groceries, maybe you want $200 for eating out, and another $100 for entertainment. I've got a kid that just got out of college. I didn't have any $1,482 because $1,000 went straight to him. Maybe you have credit cards that you're trying to pay off. So once your main bills are paid, and then you have any other obligations you're trying to take care of, that's what you're going to start working on, to where this $1,482 is accounted for down to the zero. Yeah, you have to, and that's the zero budget, is you account for every single penny. Now that doesn't mean you have to spend every single penny, but you have it allocated. So if you had $1,482, you would never, ever, ever go spend $1,482. Maybe you have your savings of $500 and you're wanting to buy a new couch. And so after you do your initial $500 deposit into savings, you're then taking more money and putting it aside into a separate, some people do an envelope system, to where literally you have an envelope that has gasoline on it, rent, utilities. And if you, for some reason, have a flat tire and have to go buy a new tire, which is $98 just about, that $98 has to come out of one or a combination of those envelopes. So if you need to come up with $98, okay, maybe I need to take some money out of groceries, and maybe I need to not spend as much money on eating out, or I was going to go to the movies and I can pull that money out. You only spend what's in that envelope, and so if you have an extra expense, you have to find that money from another envelope. So you never do anything outside that envelope. So part of that is, once you've paid your savings, it goes into savings. You don't go into savings. You find it in those envelopes. That's a Dave Ramsey thing. Same thing, guys, go to the library and check out Dave Ramsey. Do not pay for his course. If you're very active in your church, they're going to have Dave Ramsey books, or you can even go online. And his is the zero budgeting. And it's awesome. But a lot of people, especially when you're trying to do a budget, you're going to do those envelopes. And I will see people in the grocery store at church that have all these different envelopes. And it's like, oh yeah, I can make an extra donation, and they're taking it out of somewhere. But they're not just taking it and spending it. They're actively going, okay, if I give $10 to children's ministry that I wasn't expected, that $10 has to come out of somewhere. So, okay, I usually go out to lunch with the girls twice a week. Now I'm only going to go once. Heather, I really recommend that you do those classes. Oh, you already have. That's perfect. Did you find them beneficial? And you don't have to follow, I mean, I'm not a person that's like, Dave Ramsey is amazing. He is. You don't have to follow it verbatim, but it is a great process, and you will find out how much. Bye. Have a good one. You will find out how much it will help you focus in on where you just randomly spend money. So that's the zero budget, is you account for everything. And if you have extra money, it's got to go somewhere. Maybe you got a bonus and you've allocated $50 for your credit card, but you got a bonus. Oh, I got to do something with this money. Okay, instead of spending it, you now put it on your credit card. And that's what we're looking at. Okay, so we're going to wrap up our last one. Do not forget that tonight you have assignment 4.1, which is the budget, due by midnight. As well as your initial posting for 4.1 discussion. Thursday, you have the professional development assignment that is due. And then Saturday, you have the final exam. And then you have your peer post discussions due. Sunday, any missed assignments are due by Sunday midnight. So if y'all need me, call me, text me, send smoke signals. That's what I'm here for. In your next classes, if you're doing business math or anything, let me know. I'm more than happy to help. I'm always here. Will is amazing if you have him. And it has been an absolute pleasure and joy. Y'all have been a phenomenal class. I mean, almost 100% participation in everything. Very few of you have missed assignments or been late in submitting them, and that has been awesome. And it has been an absolute joy. It's even the registrar was like 100% attendance. So y'all be blessed, and I cannot wait to see y'all at graduation. All right? Oh, thank you. I appreciate it, Heather. So I'll see y'all next time. I love to say sing that time, sing that channel, but it's pretty much gone. So until next time, have a good one.